Welcome to today's analysis. आज के इस विश्लेषण में आपका स्वागत है. If you've been keeping even half an eye on the financial markets lately, you probably already know that we are standing right in the middle of a massive tectonic shift. Today, we're doing a deep dive into the 2026 transition for crypto. We're going to explore exactly how this technology is moving from the experimental fringes right onto the center stage of mainstream global finance. And more importantly, we're going to look at the exact top 12 assets that are leading this charge. Let's get right into it.
Look at this quote from Edwil Patel because it honestly captures our current reality perfectly. Do you remember those endless debates back in 2024 and 2025 about whether crypto should even exist? Well, that debate is officially over. The industry has clearly moved past its survival phase. The question is no longer if crypto will survive. The focus now is entirely on how it's integrating into the actual plumbing of our global financial system.
Here is our roadmap for today's explainer. First, we'll break down the 2026 shift. Second, we'll look at Bitcoin's crucial role as digital gold. Third, we're going to map out a strategic playbook for investors. Fourth, we'll detail the top 12 cryptocurrencies of 2026. And finally, we'll cover the future outlook and, of course, the risks. Understanding the macro theory first is absolutely crucial because it's going to show you exactly why those top 12 coins matter so much. Starting off with Section 1, the 2026 shift and the transition into mainstream finance. We need to completely redefine how we think about this space because it's no longer just an experiment for tech enthusiasts. Traditional financial giants are actively adopting crypto right now. We are seeing unprecedented regulatory clarity, which is basically paving a safe road for big money to enter. Exchange-traded funds, or ETFs, have become this massive bridge, allowing traditional capital to flow directly into the blockchain space without investors having to worry about managing private keys. Plus, we're seeing the tokenization of real-world assets, and even nation-states and massive corporations are starting to treat digital assets as strategic reserves. What we are looking at is pure institutional-grade adoption. Moving into Section 2, Bitcoin as digital gold. Let's break down how the absolute core anchor of this entire market functions, using a concept that resonates incredibly well, especially with Indian investors, who value stability. So what exactly do we mean by digital gold? Well, just like physical gold, Bitcoin is highly secure. But the real key here is that its supply is strictly limited. Because the maximum number of Bitcoins is mathematically capped, it acts as a modern digital hedge against economic instability and fiat currency inflation. It has literally become the strategic reserve for the digital age. Now get this, 17 to 23%. According to data from Chainalysis, that is the amount of Bitcoin that is permanently unrecoverable. We're talking lost hard drives, forgotten passwords, destroyed wallets. It's just gone forever. This is a brilliant illustration of its extreme scarcity. Not only is the total supply capped, but the actual available supply is actively shrinking. That makes the digital gold narrative incredibly strong. This timeline shows exactly how we got here. In 2024, those landmark ETF approvals completely blew the doors open for institutional capital. Then, in April 2024, the fourth Bitcoin halving essentially cut the flow of new supply entering the market right in half. So you have ETFs drastically increasing the demand, while the halving drastically reduces new supply. It's the perfect storm, and it perfectly sets up the landscape for 2026, where this institutional integration of digital gold is a solid, everyday reality. All right, Section 3, the strategic playbook. Let's pivot away from the macro theory for a second and talk about some actionable, prudent investment strategies. How do you actually navigate this? You generally have two approaches here, and understanding the difference between them is vital. Short-term trading, which is usually a 2 to 12-week horizon, is all about riding momentum, chasing narratives, and watching liquidity rotations. It is an exceptionally high-risk game. Long-term investing, on the other hand, looks out over years. It focuses on network fundamentals, established market caps, and actual widespread utility. The bottom line is this: short-term trading might give you quick adrenaline, but true, lasting wealth is built over time, not overnight. If you want a beginner-friendly, prudent strategy, here is your breakdown. Step 1, focus on market leaders with established liquidity. Step 2, and I literally cannot emphasize this enough, avoid margin leverage. Trading highly volatile assets with borrowed money is a massive trap for new investors. Seriously, just don't do it. And step 3, set a long-term horizon and make sure you diversify your portfolio. Let's move to Section 4, the top 12 cryptocurrencies of 2026. This is the core of our analysis today. To make these top assets easier to digest, we've grouped them by their specific roles in the broader ecosystem. We start with the absolute heavyweights. Bitcoin, as we discussed, is digital gold and the undisputed anchor of the market, heavily driven by institutional ETF inflows. Right next to it is Ethereum. Ethereum is the backbone of decentralized applications and smart contracts. Its big catalyst for 2026 is the highly anticipated Glamsterdam scalability upgrade, which is designed to drastically lower fees and expand network capacity, keeping its utility and institutional interests super high. Next up, we have the high-speed and smart contract competitors. Solana is pushing the limits with an incredible speed of up to 65,000 transactions per second. It's a high beta asset, meaning when the market moves, Solana moves fast, both up and down. Avalanche processes up to 4,500 transactions per second and offers built-in EVM compatibility, making it super easy for Ethereum developers to migrate their apps. Cardano takes a very methodical, scientific, research-based approach to its development, and Polkadot focuses purely on interoperability, allowing totally different blockchains to seamlessly communicate with each other. Finally, let's group together the utility, payments, and Oracle tokens. XRP is aiming to be the institutional cross-border alternative to SWIFT. BNB has the massive backing of the entire Binance Exchange ecosystem. Uni, or Uniswap, is the absolute leader when it comes to decentralized exchange liquidity. Ton, or Toncoin, has incredible direct utility integrated right into a massive messenger ecosystem. TRX, or Tron, dominates as a fast, low-cost network for digital entertainment and stablecoin transfers. And Link, or Chainlink, is absolutely crucial. It acts as an oracle that securely connects real-world, off-chain data to on-chain smart contracts. Now take a look at this visual for a quick reality check. Despite all the amazing innovation and excitement surrounding those altcoins we just talked about, Bitcoin still heavily dominates the actual capital flowing into the market. With roughly 60% market dominance, followed by Ethereum at roughly 10%, Bitcoin remains the undisputed gravitational center of this entire asset class. And that brings us to Section 5, Future Outlook and Risk Management. It's fun to talk about all the exciting tech, but managing your downside is what actually keeps you in the game. The absolute most crucial takeaway here is that extreme upside always comes with an extreme probability of loss. Do yourself a favor and avoid the trap of those crazy 1000x predictions on obscure microcap tokens. We have to look at the reality of market corrections impartially. Keep in mind, even fundamentally strong top-tier coins like Solana have experienced massive 94% drops during previous bear markets. Extreme volatility is just the price of admission here, so you must size your positions responsibly. Which leaves us with one final, provocative question. Crypto Boom 2026, Paisad Borega, ya dubega. Will the money rise or will it fall? The transition into mainstream finance is undeniable, and the underlying technology is maturing at a rapid pace. But, markets are always unpredictable. Your job now is to take this structured knowledge, do your own careful research, and step prudently into the future of finance. Thanks for joining today's analysis, and keep learning.